Hello, everyone. Welcome to today's market outlook update. This one's a little bit different. We normally do these every day of the week at 12:30, and if you're not around at 12:30, then once it's finished, normally by 1 o'clock UK time, it's available on YouTube as a recording straight away. So we look at the major markets. We'll take a look at pound US dollar, euro US dollar, US indices, European indices, and the price of gold and oil. But today's a bit different because it's non-farm payrolls day. So the announcement is due out at 1:30 UK time. So what's that, in about 15 minutes time? So we start this a little bit later so we can talk a bit, have a quick look at some of the markets ahead of the announcement, talk about what financial markets are expecting today, and then sit there and watch the market reaction over the announcement actually coming. So that's it. Okay, so let's talk a bit first of all about why this is important. It's arguably one of the most important announcements that we get in a month for markets. So it's a major monthly economic release. It's usually announced on the first Friday of the month, which is today, but occasionally it'll get slipped to the second Friday of the month. But it's closely watched. It's an hour ahead of the US stock market opening, and it's US unemployment data. So there's a mix of data that's in there, but it's this is at the core. So the US unemployment data, that's what non-farm payrolls are, and this is often used as a barometer for the health of the US economy. So how is the economy doing? How many people are employed? How many jobs were added last month? This sort of thing. So today's expectations are for around 165,000 jobs to have been added to the US economy in December. So I think it's quite a wide forecast this time around. I think that's about the middle of the forecast. I think some forecasting as low as plus 100. I think some going a bit higher than that. But I think 165,000 is about the median. So let's see what happens. But as ever, what is important is how the actual number compares to what the market is expecting. Okay, so if it's bang on 165,000, there's no surprise. But that's rarely the case. I mean, last time around, if we bring up the chart, this is the last year of the non-farm payrolls. I think last time around, so it would be the first Friday in January. The market was expecting, I think it was about 150,000, 200,000 jobs, whatever it was. But it came in at plus 312,000. So it massively beat expectations last time around. So the number to keep in our minds today is 165,000, and see how that compares. Okay, so that's it. That's the payrolls. Let's take a look at the markets. It's been a really interesting week for financial markets. I think, I mean, the big event of the week was the US interest rate decision on Wednesday evening. And again, it wasn't so much about the number for that. It was all about the outlook by the Fed, the US central bank, for interest rates for the rest of the year. Let me just bring up euro US dollar, because there was some concern at the end of last year that the Federal Reserve, the US central bank, was going to stick to its guns in terms of raising interest rates this year. And markets did not like that because stock markets were falling heavily end of last year. There was still the threat of the trade war. There's the US government shutdown, all this sort of stuff. And it seemed like the central bank was just going to dogmatically stick to its view of raising rates. I think it was maybe three times was the expectation for this year. But you can see the effect. This was Wednesday night. Okay, and the biggest mover was the US dollar. So what we're looking at here, this is euro US dollar. So they came out on Wednesday night and said, we're not raising rates this time round. So no expectations, no surprises there, I should say. But they did say they were going to be more patient in the year ahead when it came to raising rates. So markets took that as a bit of quite a change in attitude, that maybe we won't see as many rate rises this year in the US because the economy, maybe doesn't look as strong as it did 3 to 6 months ago. So the net effect on Wednesday night, the dollar fell because again, traditionally, if you're not going to if you raise rates, that's traditionally good for the currency of that country. If you don't raise rates, then it maybe becomes less attractive, and people look for riskier assets. People are happier to look for more risk, have a better risk appetite with low interest rates. So this was the move. So we had the euro. So euro US dollar was trading around about 114.16 when the announcement came out, and it jumped. This is a 5-minute candle, but it actually didn't even take that long. So it jumped 50 points on the announcement, and then about 45 minutes later, it was trading 80, 100 points higher. So we saw a big move there. Similar moves in gold as well. The price, because clearly gold is priced in US dollars, so traditionally gold weakness, US dollar weakness will cause a move higher in the price of gold, and we got that. There's the gold move. So it was trading around about 13.10, and then less than an hour later, it was up at 13.23, and a similar move for the stock market. So if we look at maybe the S&P 500, the broader US index, there's our move. So the S&P was trading at 2660, and then an hour later, it was up at 2690. It was a heck of a move, really. So that does make me think. I mean, normally we get some volatility over the payrolls. It does make me think that maybe, unless we get a massive miss from that 165,000 jobs expected, maybe it'll be something of a damp squib today, because we've seen plenty of volatility. But let's wait and see. We've only got 9 minutes to wait. So there's a few requests coming in for markets to look at. So we'll look at those. If I run out of time, we'll look at those after the payrolls, because I just want to keep an eye on the markets ahead of the payrolls coming out. But let's take a quick look at where we are for the week so far. I mean, let's start off with stock markets. Interestingly, from a numbers point of view, the Dow closed last night 0.3 points below 25,000. The US President Trump gets very excited when the Dow crosses 25,000. I think he tweeted earlier this week that it smashed through 25,000 again, and yesterday it closed just 0.3 below that. But stock markets have been strong this week. So here's our Dow chart on the dailies. And you can see, hang on, let's get this full screen. Here we go. So a bit of a quieter day yesterday. The S&P did push out to fresh recovery highs. The Dow didn't quite manage it. A bit quieter in the overnight market. Again, we'll see how that reacts when the payrolls come out in a few minutes' time. But that recovery is still going strong. If we flip it over to the hourly charts for stock markets, our recovery has been chugging along since what was that, Christmas Eve. So the really negative close on Christmas Eve, but post Christmas markets have been moving higher. The Dow is up almost 3,000 points, 2,800 points since the sort of the Boxing Day lows, and the market continues to move higher. Big levels to watch. I think for this afternoon's announcement, I'd keep an eye on the lows from maybe yesterday to the lows about 24,800, that sort of area. Also the lows just before that interest rate announcement came out. So I think 24.8 could be a big level to watch. I mean, it's trading just on 25,000 now. I don't think, famous last words, we'll get a 200-point move right off the announcement. But we'll see. We'll see what markets do. So we've got about 6 minutes left. Let's take a look at some other markets. We'll look at euro. So euro US dollar. We'll have a look at this as well over the announcement to see how the US dollar is performing. But it has woken up a little bit this week, euro dollar. It's been a fairly quiet couple of months. We talk about this pretty much every day, and there's never much new to say. It had a look below 113 a week last Thursday. Since then, we have been recovering all this week. It's risen a couple of 100 points over the last 8 days or so. We're trading at 114.70. But this whole 115 to 115.80 area continues to be a problem for euro dollar. So it's maybe a little bit unexciting on the longer term chart, but it's just some problems up here. Maybe the short term level to watch. It's been support all this week. 114. It's trading at 114.70 now. If we saw a bit of a knee jerk sell off by euro US dollar, maybe it ends up being a buying opportunity. Pound US dollar has been a bit quieter this week with all the Brexit announcement of last week, the Brexit excitement. But I still think, as we were saying earlier this week, 130 is still, I think, the big level. I'd still rather be a buyer rather than a seller of pound US dollar. It was 130 was a high on the way up. It's been a low. 24th of Jan. It's traded sort of 130.50. So I think this whole 130 to 130.50 area is one to watch. And just a word on trading it, really. I mean, I think we've got, how many got? We've got 4 minutes till the announcement comes out. I think if we did a trade now, it really is like betting on black or red in a casino, because it really can go either way when the announcement comes out. But very often, the first move the market makes can often be the wrong move. So you can often see when the announcement comes out at 1:30, you can often see a knee-jerk reaction one way, and then only for it over the course of maybe the next 10 minutes, the next couple of hours, the rest of the session, whatever, it retraces that move. So for me, I've got no interest in putting a trade on now, but I think is watching to see how the market reacts when it comes out, and yeah, and just to see, is there an opportunity to go against it to fade that initial move. So we'll keep an eye on it when it comes out. Let's just do a couple of other markets. We'll have a look at oil. Oil did push out to a fresh recovery high today. So let's just take this on a daily chart. So it did poke out here. This is the dailies. Poked up to what, 55.5. And I think it's still strong. That recovery off those lows is still going. I think we've got a problem area we've been looking at earlier this week up at sort of 58. So and it has gone overbought over here last week. It wouldn't be surprising to see it maybe unwind some of its strength. But I think on the downside, $50 is really the big level to watch, the big support. I think for me, as long as it stays above 50, that recovery is still very much intact. And then finally, because we've got a couple of minutes until it comes out, gold. So again, I just uploaded a video today on our YouTube channel. So after it, you can go and watch it after this on the channel. But having a look at really why has gold been so strong since these January lows, and what could the rest of the year have in store? And I think we have almost like a perfect storm we've had for gold. We've got economic uncertainty, stock market uncertainty, weaker US dollar, and maybe to a lesser extent the threat of inflation. So gold again hit a new high for this recovery yesterday. It is looking really overbought, but momentum is on its side. So I think for me, maybe the better opportunity is if we get something of a sell-off in the gold price back to maybe the mid 1200s, 1250ish, that sort of level. But for now, it's still a market that's really strong. Right, we've got, I think, just over a minute left. How long have we got? A minute and a half left. So I think the markets will flip between, actually, let me just set it up now. Euro dollar is the obvious one. So we'll just add that to our charts. And the Dow Jones, just to see how stock markets react. So we'll keep an eye on the euro. Let's flip this over to a really short-term chart. So 5-minute chart. What are the levels to watch on the 5-minute charts? Well, today, it's been as high as 114.80. It's been a fairly quiet trading day, as you'd expect. Been a bit of a run up earlier this morning. So but we're trading at 114.70-ish ahead of the number, and the Dow, so it's moving above 25,000 the Dow. Let's flip this over to a 1-minute chart to get the full drama. So there we go. So let's just keep an eye on the time, and we'll see how these markets react. But like I say, it very often you can often get an extreme move, and it's often will get reversed as the day goes on. So 25,000 is pretty much where the Dow is. In theory, if the economy is strong, it's sort of a mixed message. If you get a really good number and the economy is strong, some traders might view that as giving more confidence to the central bank to go back to raising rates. So even if we get a really good number, it doesn't necessarily mean stock markets are going to go up off the back of it. But let's see, we've got 5 seconds left now. So I'm just keeping an eye on Twitter, because the US government do tend to tweet out the numbers as soon as they get released. So Twitter tends to be pretty good for this. Here we go. Wow, 304,000. Okay, so that's massively beat expectations. Okay, so it's come in. So the market was expecting about plus 165, and it's come in at plus 304. unemployment rate edges up to 4%. So if you are on Twitter, to follow, it's the BLS Labour Statistics is what you need to look for. That's the government agency. So plus 304. So at the moment, stock market's like it. So we're up about 50 points. But yeah, and you can see, the volatility of the move, really sharp move off that number. So stock markets like the number. Look at that. Classic example of headless chicken trading there. So this is a 1 minute chart of the euro. So initially moves higher, and then has reversed that straight away and dropped 30 points. And now it's trading about 5 points below where it was before the announcement came out. So we can see. So for me, I'll be just waiting to see if things settle down and see what the market makes of this. So the euro move makes sense because we're seeing, a bit of euro weakness, we're seeing dollar strength. So we've had a much better number than expected, like we did in January, actually, the beginning of January. So you'd say that markets are reading this as the US economy maybe being stronger than we thought going into this, which would give more argument for the US central bank, the Federal Reserve, to raise rates later this year. But let's see what happens. So I think it's an interesting number that it has beaten so much again, and that the broader market economists got it wrong. As the famous saying goes, avoid forecasts, particularly those involving the future. And that's definitely been the case, I think, today. So let's see what I think maybe the opportunity when things calm down a bit. So this is a 5 minute chart of euro dollar. What were the lows for the day? The lows for the day are around about 114.30. So if the market lost maybe another 20 points from here, it starts to be interesting to see if we see buyers coming back in. It was also the low from yesterday, the low from sort of late on in the European session yesterday, 114.35, about 5:30 yesterday. The low for today, early hours this morning, for me anyway, 5:30 this morning. So for me, I would be looking to be a buyer, assuming these levels hold. So let's see what happens. But for now, it's still a bit weak. What's the Dow doing? So Dow is still holding on to those gains. So the Dow is up about 60 odd points from where it was before the number came out. I think going into this afternoon session, let's just flip this out to an hourly. If we're looking at the Dow, I think the obvious levels to watch maybe the highs set on Wednesday. So those highs up there. That's my buy sell button is an unfortunate place here because I can't actually see what the highs were. Actually, if I hold over there, 25,107. So that was the high for the Dow on Wednesday after that interest rate announcement. So there we go. Let's have a look at other markets, what the euro's doing. It's stabilizing a little bit. So it is a massive beat. So for now, we're expecting US markets when they open in just under an hour's time to open a little bit strongly. For me, maybe the interesting market to watch is going to be the euro, because we've seen that knee-jerk negative move for the euro, positive for the dollar, as you'd expect, but big support about 20 points lower than where we are now. So we'll see. I'm going to start wrapping things up there, but I'm going to have someone's asking about US dollar, Canadian dollar. So let's take a look at that while we're on here. I should say as well, we'll do this all again next week. We'll do the normal market outlook on Monday of next week at 12:30, a slightly more relaxed walk through all the various markets. Also, if you're a client, you would have noticed that we did the zero spread promotion this week for gold, and we did that on Wednesday because of the US interest rate decision. Next week, we're just trying to get it approved, but on Thursday, when we have the UK interest rate decision, I think all day we're doing a zero spread on pound US dollar. So if you're a client, you can take advantage of that. And zero spread means there's no bid offer spread. It's just one price, whether you're buying or selling. So if you're not a client, if you download our app or go to Capital.com, you can open up an account and take advantage of that. And that'll be happening next Thursday. And I think it's for 12 hours. So right, dollar Canada, the dollar against the Canadian dollar. So we had this great, I think it's an interesting market because it always trends pretty well. But this great run from 128 up to nearly 137. But I think clearly the moves over the last couple of days, we're seeing further dollar weakness following that interest rate decision on Wednesday. So arguably, I think the new trend is down. I suppose if you're going to be really aggressive here, I suppose the aggressive trade, if you think, well, actually, there's another leg of this, maybe the market's going to have another push at 134, maybe 136. I think the aggressive trade, because we had a bit of support back here in mid-November at 131.26, I suppose the aggressive trade is to be a buyer now at 131.31-ish, and with the stop loss the other side of the 131 level to see if this holds. So I suppose that you could say that's like the last ditch level that it needs to hold to try and launch a recovery from here. I mean, backing up maybe an aggressive bullish argument is the RSI. I'm not, a big fan a lot of the time of things like RSIs because I think they can give you false signals and people can end up ignoring what the price is doing and focusing too much on the squiggly lines at the bottom. But we do have a bit of bullish divergence building up where the market has sold off, RSI hits a low, rallies, sells off again, but the RSI makes a higher low. So this is known as bullish divergence, and it can be a suggestion that maybe the weakness is running out of steam. But I suppose if you're a buyer, that's the aggressive trade to do here at 131. Actually, let me flip it over to a 4-hour chart and we'll see it. So we have this old support back here at 131, and does the market hold? That's maybe another interesting one to watch this afternoon. But for me, euro dollar is maybe the more interesting FX pair. Already there's a bit of strength coming back in here. Interesting. So we'll see. Well, on Monday, we'll see how these markets ended up on Friday. So 12:30 Monday, we'll do it all again. We do send out a push notification from the app, our app, now and again. But to never miss out, if you just click on subscribe, the subscribe button in the bottom right, and that alarm bell thing next to it, you'll get a push off YouTube whenever we go live. So yet again, the US jobs report was a real surprise. Dow's up about 80 points compared to where it was before the announcement came out. Be interesting to see if it can hang on to those gains today. And we'll wrap things up there, I think. So if you've got any questions after this, you feel free to drop me an email. My email address is david.jones@capital.com. And like I say, we'll do it all on Monday at 12:30. So have a good weekend. Thanks for coming along today, and hopefully see you next week.